Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Joseph Onorati. He's CEO of DeFi Development, Michelle Burke, COO of Z Squared, and Brett Knoblauch. He is Managing Director and Head of Digital Asset Research at Cantor Fitzgerald, and we're here to discuss how institutional use cases are evolving in the digital asset space. It's great to have all of you with us. Welcome to Trade Talks. Joseph, let's kick it off with you. Give us an idea of where you sit within the digital asset space.
Sure. Thank you for having us. DeFi Development Corp is a Solana treasury strategy company listed on Nasdaq, and we took control of a publicly traded company back in April and transitioned its treasury strategy to focus on Solana, where we've raised a bit over $100 million now to acquire Solana and stake it to our validators to help secure the network, while we also have integrated the company across Solana DeFi, including a liquid stake token, DFDV Sol.
And Michelle, Z Squared, you're within the altcoin space in digital assets.
Mm-hmm. Yeah, that's correct. So Z Squared is kind of recently new to the market. I've been in the space for 5 years. We're currently doing a merger with Coeptus, and we are going to be activating 9,000 Doge miners in the US and having a 9-figured infrastructure ready to go from day one.
Yeah. And Brett, tell us about the work that you're doing within digital assets at Cantor Fitz, more traditionally known within the TradFi world, but you're really looking to, report on bridging that gap between DeFi and TradFi.
Yeah, I like to think of Cantor as kind of being the go-to bank when it comes to digital assets or crypto. I think what we're doing in the space, from research, events, capital markets, is probably second to none. Within Cantor, I kind of lead our digital assets research team. So my remit is really to cover anything that is public and touching crypto or blockchain in some form or fashion. Now, the number of those companies seems to be exploding every single day. But yeah, am solely focused on crypto, blockchain, whether it's Bitcoin, Solana, Ethereum, stable coins, and just really broadly the institutionalization of crypto that we're seeing.
Yeah. And Brett, it feels as if that's been really heightened this year. What would you say are some of the key catalysts for this transformation within the institutional space and its attraction to digital assets?
I think you have to start on the regulatory front. I think if you look back over the last 10, 15 years, the entire space has kind of been fighting with their hands tied behind their back. It's been, very difficult for anybody to start a business here. It wasn't just like coming up with a business plan. It was, if I start this business, am I going to be prosecuted for the business? And obviously that stifles innovation. It stifles capital flows. And with, a very pro crypto administration, you're no longer fighting with your hands tied behind your back. And that's kind of what we're seeing. And then at the same time, what we're seeing with stablecoins kind of represent the first real world use case or success of blockchain outside of Bitcoin being a store of value. And with Genius Bill kind of passing, I think you're going to see just a wave of institutions getting to the space to the point where, every institutional investor is going to have some allocation to crypto. And that's where we are not at today, but that's where we are going.
Yeah. And Michelle, you're increasingly seeing altcoin players look to access the public markets. Why is that?
I think that altcoins are gaining more awareness every day. The news today, for example, is buzzing around the altcoins. And that side, I think that it's a capital and scale game. The public markets are offering liquidity, visibility, and institutional confidence, especially for altcoin-focused companies that want to scale quickly and stay compliant. I believe that for a long time, Bitcoin has dominated the narrative, but we really believe that this is an altcoin moment. Investor interest is growing, and while regulation is still evolving, it is, as Brett said, a much better place for us to be in, and the environment is becoming more constructive. And being public, it brings discipline, it forces transparency, clarity, and focus, and that's something that we're really valuing.
Yeah. And Joseph, I would argue that the broadening out beyond Bitcoin just shows another way in terms of how the space is maturing.
Yeah, I totally agree. And to build on what Brett mentioned earlier about the change in the regulatory environment. One of the reasons that Bitcoin had already been adopted as, say, a treasury strategy asset, or that there were ETFs and other cases of institutional adoption as well, is because it was clear that Bitcoin was not a security prior to this administration change. And I think there is additional clarity now, certainly on other assets also not being securities, and the likelihood of classification of many of, say, the top 100 assets as ultimately not securities has opened up the market for a great deal of innovation in the public markets.
Yeah. And Joseph, can you give us more insight into the crypto treasury strategy and how treasury strategy companies can go beyond, let's say, the traditional MicroStrategy model?
Yeah, well, I'll use our company as an example, DeFi Development Corp. So our business is focused on a treasury strategy for Solana, and we think Solana, like actually many of the other altcoins or major crypto assets, can be better suited for a treasury strategy company than Bitcoin, because many of these assets are more volatile, and ultimately volatility facilitates a premium to NAV for these companies, which is a kind of a common metric for measuring one against another. There's also much more that the company can do to participate with blockchains besides Bitcoin. Like in the case of Solana, there's an active decentralized financial infrastructure in place, and these public companies like ours can participate in it. And then in some of the cases on many of these chains, including Solana, they're proof of stake assets, which means that investors and the treasury strategy companies associated with those investors can earn yield on the asset, native yield on that asset.
Yeah.
I think that's a good point to what Joseph was saying too, is if you are a Solana treasury strategy, you can stake your Solana and you can organically grow Solana on a per share basis. Where if you think about the Bitcoin treasury companies, you can't really organically grow your Bitcoin on a per share basis without kind of raising money at a premium to NAV.
Which is an interesting point when you're thinking about how you're valuing these companies. The underlying within your treasury strategy is really a key part of those fundamentals. Is that correct, Joseph, when you're thinking about it in those terms?
Yeah, that's exactly how we think about it. Yeah, our core focus is SOL per share growth, and staking and that yield generation from the staking is one of the key ways that we drive that SOL per share growth.
Yeah. And Brett, you made an interesting point before that we're in the early innings of capital markets and what that evolution is going to look like. Would you say that tokenization, as a result of what we're seeing with stable coins and understanding what the operating framework is going to look like, could that potentially play a part in the growth?
Tokenization is going to happen. I think the question is over what time frame. I think there's still a lot of market structures stuff to kind of get worked out. Like if you think of today with like Reg NMS, if you have a security that's trading on a traditional exchange, it has to adhere to best execution kind of principles. How does that work with a tokenized equity trading across the globe, across various exchanges and order books? Like I don't think we're there yet.
Right.
Europe is certainly ahead of us when it comes to tokenized securities and call it trading them on the blockchain. I think the US will get there, but it's just a question of when. But at some point, a lot of or most of real world assets are going to be tokenized. It just makes too much sense.
Yeah. Well, I mean, you have to exercise some patience here as well. At the end of the day, this is a really young asset class. And, for the infrastructure and for the, regulatory formation to take place, it's not something you can just plug and play. This is more of a 3, 5-year, 10-year outlook.
Yeah, of course. And I mean, you can see some success stories, right? Look at like BlackRock's like Biddle tokenized treasury fund, right? It's got billions of dollars of assets all running on the blockchain. There's, different parties acting on their behalf, whether it's actually doing the tokenization part of it. But it's 24/7 you can redeem, which is amazing when it comes to, financial class or asset class.
Yeah. Michelle, let's go back to Doge for a moment here. How do you think about it in terms of moving beyond a meme coin?
Good question. I think that Doge is evolving very fast. I think that Doge has had kind of, it's definitely had a party over the last week and is currently standing at a $40+ billion asset this morning. It's got strong brand, fast transaction speeds, one of the most loyal communities in crypto. Is moving beyond speculation and into real world utility. And Doge is now showing up in DeFi conversations. It's fast, it's liquid and usable, and that's exactly what institutions are looking for. It's no longer just a meme. It's being backed by real infrastructure. It's gathering huge momentum. It's got a dedicated core dev team, open source, volunteer run. It's actively maintaining and improving the network. It's showing long-term resilience. They just came out with the Wrap Doge is now live on Coinbase's layer 2, which is making it usable in DeFi. It's not just about tipping anymore. With Wrap Doge, it's now allowing Doge to be traded, lent, used in smart contracts across the DeFi ecosystem. And that's what's giving institutions confidence in moving it from a cultural asset into a usable part of the crypto stack, and it's making it more than just a meme coin now.
Right. So having products that institutional investors are more familiar with, to your point, with the wrappers, the product wrappers around them is helping to encourage that adoption.
Yeah, I think it's giving it more clout. It's making it more than what it appeared. It came out, happy, great, fun-loving, but it's now more and more institutions are utilizing it. So you've got Bitwise and 21 shares with the ETFs. You've got Grayscale. Just last week, BitOrigin announced that they were doing a $500 million Dogecoin treasury. And I think because it's got so much more utilization, they put so much energy into it. I feel like everyone is seeing that in the news, and they're starting to give it the respect that it deserves to have.
Yeah. Joseph, do you think that more companies will start to employ crypto treasury strategies?
Yeah, absolutely. I think I tweeted that there's a tsunami of them coming through the SPACs that I'm sure are in progress now, and the many public listings that are coming. That's going to be part of kind of the iceberg, but I think even bigger perhaps is the current, like the companies that are already listed, pivoting or holding some of their treasury in crypto assets. Absolutely.
Yeah. Do you think Bitcoin, Brett, potentially could become a global reserve currency?
Yeah, I think it's a matter of time. I think fiat currencies, time and time again, have proven they're not the best kind of financial media, if you will. When the world was on gold, it was a very hard currency. You couldn't just mine more gold, and even today, it's still very difficult to mine more gold. And Bitcoin takes the best aspects of gold, but also digitizes it. And it's not adherent to any one country, any one person, any one corporate. It can be a global reserve currency, and the advantages that Bitcoin has over any other reserve currency are, very noticeable. And I just think it's really a matter of time before you get, as Joseph was saying, kind of Fortune 500 companies, as you get nations like, the US or, countries in Europe start putting it on their balance sheet.
I think this is almost inevitable, the Bitcoin as a global reserve currency, because ultimately fiat, which more of it can just be kind of created at will by various governments around the world, it's going to trend to zero over time. If we look at the history of any fiat currency, it just goes down. And that's how they work. It's a fundamental component of fiat currency. And of course, this is not the case with Bitcoin. And as long as the supply is fixed and the cryptography is secure, then I think it's just a natural outcome of the system that's been put in motion.
Joseph, is that counter to the case for stable coins leveraging the US dollar? Because part of the attraction to that is certainly for the US government is to mitigate that de-dollarization theme that has, really started to emerge over the past couple of years. So is that counter to it, or is it a complement to it?
I think stablecoins are probably the best drivers of adoption of cryptocurrencies, but in the long run, much longer run, I'm not sure how many years out, then yes, I would expect stablecoins to also trend to zero. They're not actually stable, they're pegged to fiat, which is trending to zero, while of course Bitcoin is not trending to zero because the supply is fixed and it has myriad use cases now. Certainly as a store of value being one of them.
Yeah.
To add to that, I think there's a reason why if you look at the total stablecoin market today, that's 260 billion. Like most of that is US dollar. Like in terms of fiat currency, like the US dollar is the reserve currency. And there's a lot of other countries out there that just want dollars. And that's what stablecoins are offering is demand for dollars, the ability for the US to export dollars. So I kind of echo what Joseph was saying in terms of in the long run, I think it will just be Bitcoin, but that is certainly the long run. And until we get there, I think stablecoins are going to play a massive role. And you're going to see stablecoins probably, or at least the stablecoins circulating today, 10x, if not more, over like a 10 or a 10-year period.
Well, Brett, can they coexist together?
Yeah, I don't think we're going to have a hard fork where everybody in the world stops accepting dollars. At that point, like you're going to wish you owned as much Bitcoin as possible. But I think it's going to be maybe your less developed nations are probably going to adhere or switch to Bitcoin first, or try to adopt dollars. And if they can adopt dollars, adopt Bitcoin, and then gradually most countries around the world are ultimately going to have Bitcoin as a reserve currency, and Bitcoin is really what everybody's going to use to transact or some form of Bitcoin.
Right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.
Thanks.